Hello and welcome to BHP's Shareholder Q&A, which follows the release of our results for the 2025 financial half year in February. I'm Belinda Ford and I'm here with BHP's Chief Executive Officer Mike Henry and Chief Financial Officer Vandita Pant. I've got a number of questions that have come through from shareholders and I'd like to get into those, but before I do, Mike, can you give us an overview of what's happened in the half and what feedback you've had?
It was another great half. We improved safety, production outcomes, and we've advanced growth. On the safety front, we saw fewer high potential safety incidents. So these are those incidents that had the potential for serious injury. We saw fewer of those over the course of the half than the same period the year prior. And that was through a lot of very deliberate management, attention, and effort. On the production front, we saw record production in our flagship iron ore asset in Western Australia, 1% up for the period. We saw 14% improvement in production at BMA if we adjust for the Blackwater and Daunia divestments. And in copper, we saw 10% production growth over the period, and that keeps us on track for 24% growth in copper production over the past 3 years by the end of this financial year. On top of all of that, we continue to advance growth in potash in Canada. So our Jansen Stage 1 project remains on track, and we expect it will see first production next year. Exciting new commodity and growth pillar for BHP. And in addition to that, we captured or secured another copper growth option for us, this time in Argentina, where we've created the Vicuña joint venture alongside a Canadian mining company, Lundin Mining. We now have copper growth optionality in South Australia, in Chile, up in the US, and now in Argentina. So things are looking good both on the operational front and on the growth front.
Thank you, Mike. All right, let's move to some of the questions now, and I'll start with, if I could, with you, Vandita. We've got a couple of questions about BHP's share price and dividends. Jeffrey asks, when will shareholder dividends be expected to reach higher grounds? And when do you envisage this to become a reality? And Paul asks, why has the BHP share price on the ASX been so stagnant at an approximate average of $40 for so many years? And what is the strategy, if any, to see the share price increase on the ASX in the future?
Yeah, so Jeffrey and Paul, I can assure you that dividends for our shareholders is a very big consideration, and we know they're very important to our shareholders. That's the reason that our capital allocation framework embeds in it a minimum dividend payout ratio of 50% since 2016. If I were to take the track record for BHP, in the past 10 years, including the dividend we just paid for the half, we have returned $84 billion in cash dividends to shareholders. Just in the last 5 years, BHP has been the highest dividend payer on ASX and one of the top 10 dividend payers globally, excluding the state-owned entities. If I were to talk about total shareholder return, which includes both dividends and the share price, in last 5 years to this week, BHP's total shareholder return is around 81%. Compare that to 42% for ASX 200. As we go into the next phase of attractive growth options that we will execute on behalf of our shareholders for value, I can assure you that capital allocation framework with its minimum dividend will continue to allocate the cash with good shareholder returns and towards attractive growth option, all the time maximizing for both value and returns.
Thanks, Vandita. I'm going to turn now to a few questions related to potash. Edwin asks, what are the main actual and potential uses for potash or potassium in commerce and business? And Stephen asks, I'm excited to hear more about the status of the Jansen project, not just progress on the mine, but also development of the load-out facility. And Mike, can I direct these to you?
Well, Stephen, I'm also excited about potash. This is going to be a great business for BHP and for shareholders for decades to come. And I'll start with the first part of the question, which was about, well, what does potash actually get used for? It's a fertilizer. It's one of the 3 primary fertilizers. And if you think about the dynamic at play here, the world's population is growing from circa 8 billion today to 10 billion by 2050. So that's going to mean more mouths to feed. In addition to that, we're seeing, thankfully, standards of living rise around the world. And as standards of living rise, diets tend to become richer, more calorie intensive, and that means that there's more agricultural input needed for that. That combination of more mouths to feed, richer diets, means that there's going to be a lot more agricultural production needed over the coming decades, but that has to be achieved on a relatively constrained arable land footprint. So we have to get more yield off the farming land that's out there, and the route to doing that is through the scientific application of fertilizer. So we expect that that's going to give rise to strong, consistent growth in demand for potash. BHP is sitting on the world's best undeveloped, now being developed, resources of potash that's going to allow us to become one of the world's largest producers of this commodity by early next decade. We're going to be sitting at the very low end of the cost curve, and that means that we're going to be able to generate really healthy returns and value for shareholders for many, many years to come in this commodity that is going to be needed for sustainable production of food to feed the world well into the future.
Vandita, related to the above question, Jason asks, our potash strategy seems to challenge an oversupplied and political market. Considering global demand and short-term oversupply, how resilient is our potash investment, and what strategies are we using to mitigate risk?
Yeah, a very good question. And as Mike was saying, we're very excited about the entry into potash, and that's for a few reasons to what Jason is mentioning. Firstly, the commodity is resilient per se, because as Mike mentioned, the demand dynamics are such that it has a 2% CAGR out to 2050 of demand continuing to increase. That makes the commodity resilient. But Jansen is resilient as an asset within that. And that's because it will be at the low end of the cost curve while using the largest and most advanced mining equipment and technology, which gives us the cost advantage. Think of this as a long life asset, multi-decade asset, which through the cycle, due to its low end of the cost curve position, will be a fantastic asset, almost like iron ore, if I can say that, for BHP and for our shareholders. The other point to note is that we are not entering into potash all at one time. Jansen 1, first crystals come in from end of next year, that is calendar year 26, which ramps up over 2 years. And after that, Jansen 2 brings in tons, and that ramps up over 3 years. So over 5 years, we will have the 8.5 million tons come into the market. And we've been very thoughtful about how to make sure that the product placement risk is fully mitigated, which I'm very happy to share with the shareholders that for both Jansen 1 and Jansen 2, our marketing team has done a fantastic job of getting MOUs with customers globally. It's a very geodiverse book of placement of products for 100% of Jansen 1 and Jansen 2. So mitigated on risk and really excited about the position that Jansen will have in potash industry and in the portfolio for BHP for decades to come.
Thanks, Vandita. We have a question here on portfolio, which I'll address to you, Mike. Mark asks, can you unpack the thinking around the next major acquisition? Mark wants you to frame the answer around A, preferred assets in the commodity space, and B, the approach to committing billions in capex to a fossil-based project and the uncertainty around shareholder appetite for long-term returns and cost of capital recovery.
Okay, so interesting question. I probably need to start by saying we don't need to do M&A. It's one tool in the toolkit for creating long-term returns and value for shareholders, but it's not our primary focus. We all have been very clear with shareholders for years now that we have multiple levers for creating value. First and foremost, focusing on the base business and getting the most out of the capital that we have deployed in the business through productivity. That's actually our single biggest value growth lever. We then have opportunities to figure out how we can go about getting more of the resources that we already have out of the ground more quickly, sustainably, for good returns. BHP is already the world's largest copper producer. We have the world's largest resources of copper. If we can just figure out the things that we can do to get more of those copper units out of the ground into market more quickly, that creates value. We're focused on greenfields exploration. So we've increased our greenfields exploration spend to find the next wave future copper projects, predominant focus in copper. And in addition to that, as we've seen recently with our acquisition and creation of the Vicuña joint venture in Argentina, we're looking at what we've coined early stage entry. So it's getting a toehold position in these big resources that have been discovered by others, where we can bring our capability and balance sheet to bear on developing those resources. And then there's this final category of M&A. But we only pursue M&A when it's in the commodities that we like, and in what we've said is the primary growth commodities for BHP are copper and potash. It has to be for the quality of resources that are aligned with our strategy, which is large, long life, sitting at the low end of the cost curve. And most importantly, we have to be able to create more value for shareholders. So we're not just going to go out and buy copper for the sake of having more copper. We have to see a value unlock through BHP's ownership, and that can come through synergies to be released. It can come through our better ability to operate or grow the underlying assets. But there's only a few opportunities that would meet the very strict criteria that we set out, and we are always very disciplined, as we've seen in recent times, when it comes to any consideration of M&A.
Thanks, Mike. Another one on portfolio mix, Vandita, for you. Gordon wants to know about your predictions on copper prices for the next 5 years.
Yeah, so Gordon, we do not give out commodity price forecasts, but I can talk you through the demand and supply dynamics for copper, which is a very attractive commodity for us. The traditional demand for copper continues to be based on higher population in developing countries requiring and seeking higher standards of living and consumer goods. This demand is getting amplified now through higher copper needed for energy transition, including storage, transmission, etc., and for build-up of digital infrastructure. For example, the copper-hungry data centers, which are needed for the world as it consumes more and more data. On the supply side, it is challenging to bring more copper mines to bear. And that means by middle of 2030s, we have a 10 million tons of copper supply gap. Given this situation, most of the market watchers, for example, consensus copper price continues to go up because of this structural deficit expectation. Now, if I were to step back and say, what does it mean for BHP? BHP is currently the largest producer of copper in the world. In fact, on top of it, to the end of this financial year 25, we would have grown by 24% copper over last 3 years, including 10% growth in just the last half. But building on the strong foundation and our position, what we can do is through our very attractive organic growth options, supply to the world more of that copper that is needed over the next 10 years, as I was mentioning. And our suite of attractive growth options, as it is maturing, will come in and have more returns for our shareholders off the back of this very attractive commodity.
Thanks, Vandita. Mike, we've got a few related questions here. David's asked, I've been concerned for some time regarding the overdependence BHP has on returns from iron ore. Simandou is coming, maybe as early as late this year. With this high-grade ore and potential plateau in the iron ore market volume, is BHP prepared for what may come? Potentially lower prices and some current product being displaced from the market.
I'll start by saying that BHP foreshadowed or foresaw this period coming a decade ago. Because we're a very long-range company, we do fundamental analysis. We knew that the Chinese economy would develop like any other major economy globally as it's developed, that it would have a very steel-intensive early phase of economic development, that would plateau, and at some point in the future would move into decline, and along with that, iron ore demand would plateau and then begin to shrink over time. At the same time, we saw further supply coming into the market, including from the Simandou project in West Africa. And so once we'd identified that future, we set about getting ourselves into the best possible position or competitive position we could be for that coming period of more intense competition. That saw us going from being the third or fourth lowest cost producer of iron ore in the world to being the lowest for over 5 years running now. We've become a much more reliable producer, and we've improved the average quality of our product suite through the development of South Flank, which has given us a greater lump fraction in our product suite. That's a premium product, and it's allowed us to increase our average iron ore content, again, allowing us to secure higher prices. So we've improved our margins, we've improved our competitive position, and we are well placed for this coming period where competition is likely to heat up a little bit. Now, in addition to ensuring that we've got the lowest cost, most reliable iron ore business in the world, we've also focused our growth efforts on developing other commodity pillars in BHP, specific focus in copper and potash. And as you'd be aware, we've got the Jansen Stage 1 and Stage 2 projects in execution in Canada. We expect first production from Jansen Stage 1, our potash project, next year. And in addition to that, we've grown copper production, we will have grown copper production by 24% over the last 3 years by the end of this financial year. And we've created a lot more growth options in copper in South Australia, in Chile. We have the existing growth option up in the US, and we've recently established a new joint venture in Argentina called the Vicuña Joint Venture alongside a Canadian mining company, Lundin Mining. And so we have growth in copper now, or options for growth in copper now across 4 different jurisdictions alongside this pipeline of attractive growth options that we have in potash.
Thanks, Mike. We've got another question, and here, this one I'll send to you as well. And it's from Craig, and he talks about organisational structure. In the late 1990s, BHP sold their service companies of engineering and IT and lost generations of worth of technical capability and has been reliant very much on contractors ever since for key projects. Do you see that as a pivotal moment and a mistake? And what is being done to rebuild the technical capability of the company?
So we place very significant emphasis on technical excellence. And a number of years ago, we reorganized BHP to focus on building technical and functional excellence throughout the company. As part of that, we've established what we term centers of excellence. And so we have a center of excellence for maintenance and engineering, for example, a center of excellence for capital projects, a center of excellence for resource engineering or mine planning. And the list goes on. And it's in these centers of excellence where we build serious world-class technical expertise that is then able to support different parts of the business in those disciplines. And these centers also set the standards that the businesses pursue in terms of the way that they go about those various activities. I would say that they are one of the reasons why we've become a much better, more reliable, more efficient operator in recent years, and why we've gotten better at how we go about executing major capital projects. So we lead the industry in terms of our ability to bring these big projects in on time and on budget. And that comes back to how we structured ourselves, the value that we place on technical expertise and excellence, as well as the BHP operating system.
Vandita, we have one here for you to answer about BHP's investment strategy. Stephanie asks, how does BHP prioritise its investments across different projects and initiatives, such as sustainability efforts, shareholder returns, and new growth opportunities?
Stephanie, you have asked about a favourite topic of mine, which is capital allocation framework. Capital allocation framework is the way we allocate where the cash goes, all that cash that we generate. It starts with, firstly, making sure that we maintain safely all our assets. And that is quite important for reliability as well as for safety of our operation. So that is the first use of our cash. Along with that is decarbonization, capital expenditure which may be needed to meet our committed targets, for example, reduction of carbon emissions by 30% by 2030, for example. Next is when we test for strong balance sheet. Really important that we secure resilience of balance sheet, both so that it's resilient through the cycle, but also to take opportunities which may arise from time to time. Thirdly, 50% of minimum dividend payout, as I was saying earlier, is our commitment, and that's where the cash goes. After that, all uses of the capital compete equally, be it for organic growth, be it for putting further on our balance sheet, or indeed for additional shareholder returns or buybacks. All this is done to maximize both returns and value for our shareholders. And this capital allocation rigor is applied every 6 months as we look to allocate capital to the maximization of value and returns by the board.
Thanks, Vandita. We've got a follow-up here on investments, Mike. And Michael asks, as your assets and capex outside Australia now significantly exceed your book value of Australian assets and capex, what are your intentions towards investment in Australia? And what are the factors inhibiting the big Australian from investing a greater proportion of its capex in Australia?
Okay, so interesting question. I mean, just to align on the numbers, it's roughly half-half currently in terms of the amount of capex that we're spending outside of Australia versus inside of Australia. And net asset value for the company is still about 70% in Australia. But I think the premise of the question, which is correct, is that we're investing more of our growth capital outside of Australia, currently in potash in Canada, and in the coming period in copper in Chile, which aligns with our intent to grow copper and potash as two commodities within the business. Now, the question about, well, what impedes us from investing more in Australia here? Part of it is related to the resource. So we've targeted copper and potash as the growth pillars for the company. And here in Australia, we only have one large copper resource, and that's Copper South Australia. This is, of course, after the acquisition of Oz Minerals, which in itself was a pretty sizable investment in future copper growth. So we've got that opportunity. We then have to think about risk and returns. And capital is always going to chase the best risk and returns for shareholders. Part of that comes back to the underlying resource opportunity, and we see competition for capital between potash, our copper projects elsewhere in the world, and Copper South Australia here. And then in terms of risk, we have to think about what's the policy landscape, and is it moving us forward and making capital investments more economic, or does it run the risk of pulling us backwards on productivity and so on? And we've been quite clear that there's certain aspects of the policy landscape here in Australia that make us competitive for capital. There's certain aspects that are making us less competitive relative to other opportunities globally. Now, that's at a federal level. Of course, on a state-by-state basis, we do see differences, and we think both WA and South Australia are attractive. And we have governments there that are looking for and pulling in investment. But it really comes back to the fundamental opportunities and how they compete versus other options in the portfolio.
Thanks, Mike. Another one for you. James asks, there's been a lot of discussion in the media recently about DEI, or diversity, equity and inclusion, and its place in the corporate world. Can you explain how DEI initiatives directly contribute to the company's financial performance and shareholder value rather than diverting resources from core business opportunities?
Okay, look, there has been discussion in the wider world about this recently. I can say with absolute confidence that our focus on achieving a gender-balanced workforce by 2025 has improved underlying business performance. And I'm talking about safety. We've become a safer company. We've become a more reliable producer. We've gotten better at controlling costs. And in fact, we've improved our relative cost position, and as a result of that, have improved relative margins. So on all fronts, be it safety, production, financial, we've improved performance through the creation of a more inclusive culture that's been the underpinning to us achieving a more gender-balanced workforce. So directly aligned with our business performance and with shareholder interest.
Thanks, Mike. This one's more of an operational question, so I'll ask you to take it, Mike. Dylan wants to know, how has the ramp-up in operations at BHP's South Flank been travelling? I think you mentioned this earlier. And also, how has BHP's operating system been implemented at South Flank and other BHP mines?
So the ramp up at South Flank is going well. This was a very big new iron ore mine development as part of our Western Australian iron ore complex. Initially, the initial decision to invest in it taken back in 2017. In the period since, we've built the mine, we've ramped it up to full production, and it's going well. And it's had all of the intended positive effect that we intended with it in iron ore, and that it's lifted our proportion of lump, which is a premium product. It's increased our overall average iron content, so it's allowed us to secure better pricing from customers as well. Now, that's been partly enabled by the BHP operating system, which was part of the question. The BHP operating system is being implemented across the whole of BHP. It's meant to enable our frontline people in their day-to-day work to bring more of their ideas, experience, and capability to bear on continuously improving our underlying work. That's made us more reliable, and it's given us a more engaged workforce as well. So that's helped us at South Flank, but it's not just at South Flank. We've seen great results from the BHP operating system at Olympic Dam, where we have more reliable operations, at Escondida, where we've improved concentrator performance and cathode performance. So right across the whole of BHP, we're seeing the fruits of our investment in the BHP operating system, and this is going to create really sustainable shareholder value in the years to come.
We have a few questions here from Natasha, and I'll direct the first one to you, Vandita. Net debt and the gearing ratio has increased slightly. What's the target range for the company? And over the year, what is your target for these measures? Increase or decrease?
Very important question, Natasha. So our net debt range is 5 billion to 15 billion. For the half that just ended, we have had a net debt at 11.8 billion. And we are guiding towards, for the end of the year, to the top end of the range. Now, if I look at net debt is one way to characterize it, which is what we look at. But to assess the balance sheet strength, we also look at gearing and leverage. Whichever metric you put the balance sheet test through, it comes out as very strong balance sheet. For example, if we were to take about net debt to EBITDA, we are at a low level of 0.4x. Compared to any company, competitors, or even of our past, it's an absolute low number, which means the balance sheet continues to be very conservative, which gives us protection through the cycle, but equally allows us the flexibility that we need to invest more. And as we go forward in the investing phase, I can assure Natasha and all our shareholders that our focus philosophically on strong balance sheet, resilient through the cycle, will always remain, because we know that gives us protection, that gives us flexibility to invest for the shareholder returns, but also enables BHP to continue to be a strong, conservative way of financial management, which allows for better returns over a period of time.
Thanks, Vandita. Mike, Natasha also asks, China has set a GDP target of 5% for 2025 to increase consumer demand. How has this changed BHP's target forecast, particularly for iron ore and coal? She also asks, there's a lot of focus on uncertainty on the Trump tariff wars and how will this play out? And how this will play out. But what steps is BHP taking or has taken to minimise any fallout from these tariff increases?
Thanks, Belinda. So two-part question, China, US tariffs. If I speak firstly about China, as it happens, I was recently up in Beijing and was able to hear on the ground there a heightened level of confidence about the economic outlook there. Of course, there's headwinds, but what struck me was that there's a well thought through, coherent policy in respect of how they go about kickstarting consumption there. Clearly, the real estate sector has been under a bit of pressure, but the government has been enacting various policies where we can now start to see a bit of stability creeping through in that sector and some green shoots that cause us to think that there's potential here for that sector to build a bit of momentum moving towards the end of this calendar year and into next calendar year. Now, we also have to keep in mind that there's been many sectors of the Chinese economy that have been performing strongly, and that's why we've seen strong iron ore demand, steel production over 1 billion tons per annum for the 6th year running, and healthy demand for other commodities. And they've been driven by a strong auto sector, manufacturing, infrastructure, and exports. Now, as was noted in the question, China has set out a 5% growth, about 5% growth ambition for the year ahead as well. And they've done a pretty good job of meeting their growth targets in recent years. And that does require a tweaking of policy settings as they go and as they see what's happening in the underlying economy. We remain optimistic about the outlook for the Chinese economy in the medium to long term, and the positive effect that we then believe that that's going to have on commodity demand. Now, there was also a question posed about U.S. tariffs. And I think stating the obvious, there's a lot of uncertainty there currently. However, only 2 to 3% of BHP's revenue line is in the US. So the first order impacts of any tariffs that are put in place there on BHP are relatively limited. Of course, we then have to think through what are the counter tariffs and what does a move towards less free trade do to global economic growth. But BHP is well set for pretty much any scenario in that we've got commodities that have the most resilient demand. We sit at the very bottom end of our respective cost curves. So even in the face of price volatility or a bit of a turn down in global growth, we're better positioned than most to weather that because we've got the strongest margins. And as you've heard from Vandita today, we have a very strong balance sheet.
Thanks, Mike. Another question for you, Mike, from Alistair, who asks, Australia's renewable program faces high costs and failure to deliver due to reliance on wind and solar. As the largest uranium source in the world, why is BHP reluctant to back nuclear while divesting from coal and oil? Do you see BHP playing any role in Australia's nuclear program?
We've been very clear and consistent on our position in respect of both the energy mix and nuclear. We believe that all technologies have to be on the table for consideration in the pursuit of the lowest cost, most reliable, decarbonized energy system. And nuclear should be up there for consideration, just like other low emissions technologies should be.
Thanks, Mike and Vandita, for your time. Mike, any final thoughts before we close?
Underlying company performance is going strong. As shareholders can see in our results from the last half, production remains on track. In fact, we saw increases across a number of our businesses. Costs remain under control. We continue to advance growth, and that's the growth that's going to support and underpin attractive shareholder returns and value for decades to come.
Thanks, Mike and Vandita. A reminder that this presentation will remain available to view on bhp.com. Thank you, everyone, for your questions and contributions, and goodbye for now.